Good morning and welcome everyone to the Beginners Online Trading webinar. My name is Danny and I will give you the webinar today. I shall explain what will happen in the webinar before we will begin. So the first part will be more of an introduction to the company. What we have here in this facility is called a web trader. Okay, I'll have more comprehensive explanation in a minute. The second part will be more practical, so we will discuss things such as logic behind certain things that are here, okay, basic foundations, I like to call it. And then when we are done with the preparation, we can carry on with ease and hopefully this system analysis, okay, is the third part. Okay, so I want to make sure that everything is recorded. I was just about to say the webinar is live, but it will be recorded and uploaded to YouTube later on for you to review. And any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. That's it. Apart from that, I just want to make sure that everything is in its place. Then I'll be back and we will begin. So I'll be right back. Thank you, Barry. Now, a little bit about AvaTrade. So many of you know we exist since 2006. We have 9 licenses worldwide. We are a regulated company. Okay, this is the customer service in case you'll need any questions or queries. It's right here at the bottom left through either the chat or the WhatsApp. And I'm also going to write here the email address for you to contact, because sometimes you don't get to see this interface. Okay, the web trader is something you have to see as soon as you're logging into the website with your email and password. And if it doesn't look this way, naturally, you won't be able to access this button here and then to access the live chat. Okay, so you can just contact customer service and they will apply it. And then you can carry on, like I said, and do it from here. And so other features that I'm going to show you that are only in here on the web trader. Now, beside customer service, which can give a hand in case you have a query or a question, you also get a senior account manager. Okay. Senior account manager, depending on your eligibility. After you funded your account and you started to move, you can ask for a senior account manager to also assist you through the process, assist you with the plan and with the strategy, with calculations, with analysis, with basically everything related to trading, really. Okay. Now, beside that, as I said, we are going to carry on with the web trader. But just before that, I would like to put down just the regular platforms. I know it sounds bad, regular platforms, but they are what they are. Okay, MT4 and MT5 are not the web trader. They're also amazing platforms. And we also have our social and our options. Sometimes I do speak about the differences between MT4 and MT5, but I don't want to go too far with that. I'm just going to tell you MT4 and MT5 are quite similar, and you can do quite similar things, and they both correlate with the web trader. Therefore, if I wish to experiment MT4 or MT5 or vice versa, the web trader, whatever I'm going to do on the MT4 is going to reflect on the web trader, and whatever I'm going to do with MT5, it's going to reflect on the web trader and vice versa. So I can basically trade whatever I want. I can also analyze here and execute here. Anyway, you understand the idea, and that's very, very convenient. Okay. Now about Ava Social, we have 2 main functions on it, which is follow and copy. By follow, I mean okay, so just on a nutshell, Ava Social is built letting you follow or copy someone. That means that it's a social media platform, and it's through, you see some kind of lists which allows you to pick a trader to either follow or a copy. Okay, follow means that the one that I'm following, I will get his tradings and I will choose if they execute or not in a form of a message. And with copy, it's just executing it automatically. So if I'm following someone, I'm going to get the positions that is taken for me. to either take or not to take. Okay, and if I'm copying someone, it just happened automatically. I don't have to do anything. Okay, both cases I can adjust it and I can change it and I can modify that. And it's something you should consider, because if you're following or copying somebody with much more considerable balance, you probably want to do that. Okay, to make the adjustment just so the risk money management won't get messy or something like that. Now, other options, this is not an options webinar, therefore there is no really point to explain too much, but I would say as part of our innovative apps, this is something you might want to try if you're trading options. Absolutely, Ava options can give you just an ask here quickly, and you can find it on your personal store. Okay, on your device, you can find the app, and in the website there is a nice tutorial if you want to explore it more. Okay, and now we're going to carry on with the web trader. As I said, we are going to cover some main features that we added only in here, so those features will not be found on MT4 and MT5. Let me just quickly put that down. Okay, and now the reason that I've put it apart is because what I'm going to show you is only with the Avago and the web trader. Okay, and what I'm going to begin with, actually, let's begin with something else. You see on the left-hand side, you have some features, some functions. Okay, in here, you can get more information about your accounts and so on. In here to trade, positions, order, history, and this is what I'm going to show you. So I'm just going to fold that down. Okay, I'm going to fold it down with the arrows here by clicking, and then through the lists, I have this blue light icon. Let's just pick something, okay, like that, the euro versus the CAD. So when I'm clicking on the icon, what's going to do is it's going to show me the signal. Okay, the signal is structured, allowing me to automatically place take profit and stop loss with a buy or a sell scenario. I know that it might sound complex, but we're going to break it down in a minute. And what it does when I choose which scenario if I want, okay, let's suppose I'm going to go with a buy. What it's going to do, it's going to place automatically take profit and stop loss, and it's going to show me the possible profit and loss. Now, what exactly those are, again, I'm going to explain on the signal in just a minute. But in the meantime, what is that? What is trade take profit and stop loss? Okay, so just on a nutshell, the general idea here. When I'm buying something, my intention is that the value will increase. When I'm selling something, I want the value to decrease. Therefore, the take profit and the stop loss allows me to do things automatically. Okay, it's a pending order. It sits on the chart in whatever price I want it to be. Let's say, in this case, it will be this price, and it will be, there is again no need to know what I'm doing now, okay, because I will explain about it later. I just want you to have the general idea. So we clicked on the signal, we clicked on the buy scenario, and now we have take profit and stop loss predetermined, allowing us to see the possible profit and loss. Of course, I can change it, and I can modify that as I want. I can also modify naturally the lot size and the rest of the things, but the signal is preparing me those settings. Now, what exactly does that mean? How do we use it? So I showed you the signal through here, okay, but I'm gonna hop onto the section itself. The reason is, when I'm picking a signal, its analysis has been done upon a certain price. Therefore, the scenario described here is expected to get to certain levels. Now, as you can see here, there is the production time. Okay, so whoever analyzed that, whether if it's a computer or a human being, and I should clarify, it's not Ava Trade Signals, it's from the Trading Central. So whatever analysis he has done and whatever scenario that is here, naturally, because the market is moving, the more time will pass, the more the market will move. Yeah, so let me show you. Just so the production time does mean something that I have to look before I'm taking the signal, and I want to show you quickly here the reason that I'm showing you that. Well, it seems like they're all still. Oh, there we go. You see, if I'm looking at a signal that was produced a while ago, right, as comparison to obviously those signals, you see it's a linear timeline. Okay, if I'm gonna go down to the, where was it? In here, right? And I'm gonna pick Brent oil, and I'm gonna click on the signal. Okay, view signal, that's like the blue lightning icon. We're gonna click in here, and unfortunately, the market has already reached a key level. That means that the analysis here was already fulfilled. Yeah, I'm just giving you here some tips how to utilize with the signals much more efficiently, and not just to blindly go ahead with it, even though you can. Let me just show you quickly how easy that is. Okay, without any preparations, just gonna go with the Dow Jones, click on the buy or sell. Yeah, 2 clicks away, I'm here. But there are a few things I might want to check beforehand. So when I'm opening a signal, one of the things is the validity. I'm going to compare some support and resistance levels. On a nutshell, support will be higher lines above my price on certain edge points, and resistance will be in higher levels, and support will be underneath, okay, supporting us from falling farther. And what I'm going to do is simply change. You see in here it's daily. Therefore, the levels that we're getting are not the same, right? They're not. So in order for me to go higher, to see higher in a bigger time frame, I have to change to the days. And now the same validity allows me to see the same levels and so on. Okay, so that's one of the things. I still want to see that the scenario here is, to my opinion, it hasn't been changed, because we understood that the market keep on shifting. And I can take it from here, I can take it from here, it doesn't really matter. Okay, support and resistance, I place it on the chart by clicking on the price line. I can examine if it's a buy scenario or a sell scenario. I can also compare like we said, the R&R, the risk-reward ratio, what I can make, what I can lose, okay? I can adjust it if I want. All right. That's basically it regarding the signals. Before we carry on, do we have any questions, guys, about the signal section, how to use it, how to do anything in here before I carry on? Any questions? Do we have to pay? No, Dovo, you don't have to pay for that. As I showed, it's right here. So you don't have to pay. You just click on the section and you can enjoy it as much as you want. All right, thank you, Dovo, for the questions. Do we have any more questions? Otherwise, let's just carry on. Okay, so this is among the umbrella, the analysis that was done here, support and resistance, is among technical analysis. So we have technical and fundamental analysis, technical analysis, and fundamental analysis. And this is among technical analysis. What I'm going to show you now is more fundamental analysis. Reference, which is the news section. So I'm just going to click it. This is as well part of Trading Central analysis. Okay, we're going to give it a moment. Sometimes it needs a little bit encouragement. Let's see. Okay, and then I have here some nice categories. So I can go through the articles. A huge benefit about using the news section, it's that it's showing you here, you see at the bottom what it's related to. Then it saves you the trouble what to analyze, because it can hint, this article can hint something regarding the pound versus dollar and the euro versus dollar, right? If I'll take something else, it's going to show, well, that's pretty self-explanatory. The pre-Asia market offers variety of assets that might fluctuate, and so on and so on. I can pick something specific if I want. What else? Yeah, that's basically the news section. I don't think there's more to explain. In Discovery, you can find, let's go with Market Buzz, that can hint what is fluctuative and might be worth looking at. We have a question here from Prabath. When logging into the website, error code coming sometimes. When connection mobile internet, may I know what it means? I think, Mr. Prabath, you need to proceed with the question, because I'm not sure how I can assist you. If the connection internet is not stable, you might get a message that it's unstable. Try and maybe do it in a different network. I really don't know. I'm not technical enough for that. But contact your senior account manager, and if it's a particular case, maybe we can assist you. Yeah. Now, as I showed, we have some, this is through the Market Buzz, we have some interesting things here. Microsoft, Tesla, okay, RT, Amazon, Apple, okay. And then if I go a little farther down, we have the economic calendar. Okay, which similarly I can also filter. That, okay, let's reset that. And we are clear on that side. Let's see if we have to, okay. Now, the economic calendar, the way that it's built, you see we have the previous, okay, so we're going to look at, let me find something interesting. Okay, so if I'm looking at Ireland employment rate, okay, and I'm looking at here at that one has already occurred, but never mind, it's only for the sake of the example. This is the last result, that what happened last time. You see that the anticipation is that it will stay the same forecast, and the actual is that it was actually changed. Okay, it came positive, came higher than the last time and higher than the forecast. We can assume something will happen as a result out of that. I'm not getting into that now. And if I click it, it's going to specify what's happening here, what is what it means. It also allows me to book it on my calendar, which to my personal opinion, it's amazing. Saves you the trouble if you're looking for a specific event. Okay, now if I want to get only Ireland news, what I can do is I can just go down like I did. You see there are countries here, lots of countries. Okay, and I'm just clicking what I want. If I favorite Ireland, I'm just following Ireland. Oops. Something, just a second. Maybe I did something. Okay, let me try again. All right, now it's showing us Ireland only. I can go by the high impact only. I can filter it by the date. Let's suppose I'm looking only at see, it's not showing us any events that are upcoming. Maybe we'll try a little farther away. You see, it's going to show me that the closest event will be on the 9th, which is approximately 4 days from now. 9th, Thursday. And then afterwards, May. Okay, I can reset the selection, and I can reset that selection by clicking on the date. Okay. And we are also clear in here, and that's wonderful. All right, now do we have, I almost forgot to ask, do we have any questions about the economic calendar? Any questions at all, guys? How to do, what to do, anything? Okay, so let's carry on. Let's just carry on for the time being. Okay, and what we're gonna do, like I said, the second part will be much more practical, so I would highly recommend you all to have somewhere to jot down your notes. And let's pick a lovely asset to play with. I think gold has been very, very interesting in the past few days. Yeah, it was. Okay, let's do that. But I also want to show you how to use. So what we're going to do is we're going to go from left to right. I'm going to show you the functions in here, and then we can be on the same page with the functions. Yeah. So this is the search bar. What we're going to do is just type down gold. Okay, Emmanuel, you're complaining that the sound is coming faster than the video. Okay, I'm not sure. Really, maybe there is a. At least I hope can everybody else hear me properly, and does my voice matches what I do on the chart, or this is also a problem for you guys? Because it might be something with a connection. Could be. I'm just, again, as I've explained before, guys, I'm an expert with trading. I have my technical understanding is not as near. Oh, okay. All right, perfect. So maybe, Emmanuel, I see that other people are commenting that it's fine. Check your facility. Maybe it's connection, or I don't know. I really don't know. I'm sorry. Okay, so let's, like I said, I wanted to show you the search bar. So I'm just going to put down gold, right? And then I'm going to take it from the list. I could do this with any other thing, really, Apple or whatever else I want. Okay, and let's hit the, let's first carry on. So we have here the time frames, which you saw me changing. Let's change, just for the sake of the example, to weeks. Now each candle here is a week. How can I validate that it's really weeks that I'm looking at? Okay, I can change the crosshair from no crosshair to crosshair. And then when I have this cross following my hand, I'm going to get data from the chart. Yeah, you see in here at the left upper corner, I have this rectangle popping when I am moving my hand. Okay, and what I skipped is to change the chart shape, whether if it's presented in candles or with a line. We already know, let me quickly go back to days. Okay, we already know that the candles has some advantages that the line doesn't allow us to see, which can be critical. You see, this is the same support line, right? And if I'll change it back to the line, it's not going to show me those lovely tails, which can signify support and resistance areas and can be crucial to my analysis. Now, I'm not saying that the line is bad. Okay, if people now think, oh, Danny, using the line is bad, you can use it for rough analysis, and you can even do amazing analysis with it. But I'm just showing you the difference, that if you click on candles, you get the specifications. Yeah. and it's for you to choose. Okay. All right, we went through until that, and we can also change. You see, I can change the layout from 1 to 2. Then I have, well, both gold. Let me change that. We'll go with US Tech 100. Then we have Nasdaq here and gold here. Okay. I'm gonna go back to the gold. In here, I can add an indicator, Bollinger Bands, RSI as an example, stochastics maybe. Yeah, let's just, you see, you click and you drag. We don't really need it now, but I'm just saving it to show you. And once I have it here, I can modify that, then click save, and it's on the chart. Okay, to get rid of it is just as easy. Clicking here on the X, click save, and we are here. Yes, and this list is what I used to place all those lovely lines. Okay, you see you have a nice inventory with all kind of shenanigans that can help you with your analysis. Certain areas you want to remember, certain levels perhaps. Okay, you can even, just a second, you can even place a note, which it doesn't like us now. Smaller time frame, can hear you, but can't get a chat. Okay, John, you wrote to me on the perfect place to ask a question. You used the question section correctly, so you can just ask. You can ask what you want. And the rest of you as well. As I said, the question section, guys, is all yours. You can take advantage of this webinar being live. All right, and as I said, we have all kind of shenanigans in here. Okay, let's get rid of the background. Now I want to carry on to the right section. I'm going to click on sell or buy. They both open the sidebar. And then I can see I have this tab and I have that tab. Now this tab offers me the information such as which time I can trade the asset, what is the lot size of the asset, the spread, the leverage, how much margin I need out of the value of the position, the overnight fee. Okay, and in here I can execute the position as we saw, and I can modify that, which we are going to do in a minute. Now let's analyze gold. And I have to say, it looks very, very interesting. Very interesting. Let's put that to the minimum for our comparison, and let's quickly get rid of, let's get rid of everything. Okay, if we need something, we'll rewrite. And we are going to put down some nice 4 ingredients that will hopefully help us construct the position with a bit more sense. So we have target time, movements, and units. Okay. Now, whatever I'm going to teach you now, guys, is universal. The advantage of learning something universal is that you can just take whatever I'm teaching you now, correlate it to another asset, and it will work perfectly fine. Okay, different numbers, but the technique should work the same way. Okay, let's establish something before we begin. As I said before, when I'm buying something, the intention is that the value will increase. When I'm selling something, it goes down. When I'm selling something, my intention is that it will go down. Therefore, naturally, when I'm buying something and it goes farther down, I'll have a loss. And when I'm selling something and it goes against me upwards, then I have a loss. Now, let's suppose that I'm going to tell you guys, gold right now can go up. Let's suppose that right now we see at this green, I hope that you guys can see the rate here to the right. The ray is the actual price. The ray is, you see the price is presented here as well, right? So we have green, red, but it's presented here as well, the bid and the ask. And my question to you is that, if I give you the direction only, buy or sell, and I don't specify till what price or till what area it's going to get to, does it help you with the analysis? Is the direction only enough to analysis? Okay, let's suppose I give you the direction, telling you buy or sell, doesn't really matter. Okay, let me just show you how quickly things can change, right? So we're gonna go to 1 minute, and I'm gonna show you, those are all minutes, right? Look how fast the market has changed from buy to sell. Therefore, to figure the direction, it's fine. It's good to know if it's a sell or a buy, but I also have to specify some kind of a range. So if I'm going back to days and I see certain levels, see, let's suppose I think it will turn back up. Then I have this price I can get. Maybe I can place my, you remember that I've explained to you, take profit closes the position automatically with the profit. Stop loss closes the position automatically with a loss. Okay, it's prices that I can change. So I can think, okay, Danny think that gold is going up. Till what price? This price, that price, perhaps that price. What do you think is a reasonable price for gold to get to, right? Okay, so let's suppose we picked one of the prices, we took the buy, like it says here, and then it's going up. Now, I could never know anything about that position unless I'm going to use those 4 ingredients. Now, what do I mean by that? Let's suppose I'm going to take now a buy. Is there any estimation in here along the way, this area here, let's call it the profit area? Since we are with a buy, what did we say? We say that with a buy, our intention is that the asset will go higher. Therefore, this is my any price higher than the current price will be profit after we cover the spread, and this could naturally be my loss area. Okay, so let's suppose I took a buy, it goes up, wonderful, I'm making profits, but I would never know how much profits I'm making, how long it's going to take it, if it's really worth for me to take this position or it's too risky, if I have enough money. Those things I need to know. So the first thing that I'm going to do is I'm going to set myself a target, so I will know when to first close the position. Now, if it goes up and I want to make, let's say, whatever I want to make, let's say I want to make $500, okay? And now I'm going to think about the time. Again, because the direction only is insufficient, I need to know kind of measurement, what price I can aim for, that it's realistic. And here, and here, and here, maybe higher even, we'll see. So the time allows me to specify which candles I'm going to analyze, whether if it's days or minutes or hours or weeks. And something else that it does is it allows me to judge whether this position is worth my time or not. How does that work? Let's suppose I want to make this $500 daily, okay? Per day, one day, I want to make $500 daily. That's not bad, right? Times, I can't really trade 30 days a month. So if I trade 20 days and I make 500, if I sum it up, looks pretty good, right? Can make 10K a month. If I plan to make it on weekly basis, then monthly I'll have 2K. That's again not bad. But what about 1 month or 1 year? Is it really worth for me to hold this position for 1 year? Yeah, I don't really know about that. So let's say daily sounds fine. So we're gonna stick with daily, $500 per day. And now we're getting somewhere. Now slowly, I have a target, I have a destined time to make. Okay, and now I can see what approximately can be the movement. How can I do that? The natural way we'll basically do to basically examine it is just to look at the previous candles. But the problem is that if I look at yesterday to estimate today, let me just show you the size of that candle and the size of, when was that, Friday? Of Friday, right? You have to agree with me, guys, even the beginners among you, that these candles are not the same size. And they are built completely different, right? We see yesterday and we see Friday. So why am I showing you this? So to analyze that wouldn't necessarily indicate what will happen tomorrow or today, because it just looks different. Therefore, I need to grasp more than a single candle. So if naturally I'm going to take yesterday's candle, okay, you see that when I'm pointing on it, it's going to show me here open, close, high, and lows. Yeah, what exactly are those? Those are, just hold on a minute. Open will be where it started, close is where it closed, high is the highest point, and low is naturally the lowest point. So if I'll take the open and I subtract it by the close, then what I will have is the difference between the colored area. And if I'll take the high and the lows and I subtract the high from the low, then I'll have the difference between the bottom to the top. Therefore, yesterday gold closed $42, higher than lower than it was in the beginning. And the whole difference was 51. Does this make sense? Yes, it does. Right? Okay. Now, when I'm looking at those numbers, and again, I'm comparing it with other candles, it doesn't seem right. So what I can do in order to estimate a bit more precise average, a bit more precise number, because if I'm looking at the current price and I match it with the numbers we got from yesterday's candle, and I'm looking at $40 up, it will be approximately here, right? Here. But because we understand that yesterday was more considerable than other average candles, we want to use an indicator to average it out of more candles rather than just one. Now this indicator is called ATR. Okay, we're going to click on the average true range through the indicator section. And I'm going to write down here AVE. And then I'm going to click and drag it to the right. Maybe 14 days is a bit long to go. What I really want is just 1 week. And keep it on wheelers for now. Let's make it mustard as always. Is this even mustard? I don't know. Maybe that one. Okay, and then it's showing us that the average is entirely different than yesterday. See this? Yesterday was unusual, yeah? But the actual average is 26,695. Therefore, almost 27, right? So when I'm looking at the current price, and I'm matching it with the ATR, so we have 2291 plus 27, and that's approximately that one is closer here somewhere, yeah? Now, okay, so let's suppose that this is not a bad number. Do you think can gold get from 2291 to 2318 in a day? I nearly forgot. What do you think, guys? Is it possible that it will get from 2291 to 2318 in a day? Is this realistic expectation or not? What do you think? Okay, so John, anything is possible. Yeah, but my question, John, is not if it's possible, if it's realistic, if it's something that I can expect, right? What do you think? Is it realistic or not? Okay, so George, it's a little optimistic in my opinion. Okay, optimistic, I understand. What? Okay, so Gunnison, you wrote no. Okay, that's a no. So we have some no's, we have some yes, and that's fine. Let's compare it with the ATR. So the ATR is telling us $27. And Pravath, you're asking if it depends equity. The answer is no. No, my friend. Equity is something else, which I'm going to explain to you, but it's something else. What I'm asking is actually how much it can move, right? If it can move farther up or farther down. And we have some no's and some yes, and that's fine. But I think as a precautious, I can just push it down to 23.15. Okay, and this way I am lower than the average. I'm even lower than the average. And I know for a fact that it's been there yesterday. And I also know that it's been there a week ago and the day before and the day before, which helped me gain confidence with my decision, whether if it can get there or not. And I'm also going to paint it in green, okay? And then I'm going to simply place my take profit there, okay, to close it automatically when it gets there. And in here, I'm going to write down, let's see how many dollars away is that? 22.19 minus 23.15, that's $25. Okay, not bad at all. Okay. How many gold units I have to buy to make $500 with $25 per ounce? What do you guys think? How many do I need? I'm going to show you down here an equation. Okay, and target divided by movements equals units. So naturally, 500 divided by 25 is how much, guys? Who knows the answer for that? Well, let me also elaborate here. This is the price difference, and that is the lot amount. 20. Okay, all right. We have first answer from John. Who thinks otherwise? Let's do it together though. We have a question from Andrew. Andrew, will this work the same way? Yeah, absolutely, Andrew. As I said in the beginning, this will work the same way with stocks. This will work the same way with indices and whatever else you want. Okay, this will work the same way. We have from Prabhath another good answer. Very good, guys. You guys are amazing. Just amazing. Let's put here 20. Okay. And let's quickly, so this is obviously 20. Let's quickly get rid of that. Okay. And look, just look, guys, how amazing that structure has gotten us. We have now a position that is well composed. Oh, let's also examine that it's really what we want, right? Because the possible profit here hasn't changed. So I'm going to change here to 20. And that is showing us that it's nearly the number that we wanted. Let me be precise about the, it keeps on moving, but I guess it will move down further to where it was in the beginning. We'll have 500 flat. Okay, just look how nice that is built. John, you're asking, are you taking accounts percentage trades into consideration? Absolutely, John. That's an amazing question. This is called risk money management, and we are going to discuss this in a minute. Okay, so we have the position composed, take profit. This makes sense. We're looking at 20 ounces. Everything seems fine. Let's check we have the budget for that, right? So I'm going to write here, I'm going to write down price per unit times units, again, lot amount, equals value. And in here, we're going to write down value divided by leverage equals margin impact, which also known as the necessary amount to open the position. Okay. And oh, let me write down here, leverage is a multiplying, let's see, 1 to 20, and in brackets, leverage multiplies buying and selling ability. Now, how does that work exactly? We are looking at the price. The price here is 22.92. Let's keep it as it is. Times 20 units, right? So we said price per unit times units. So that's times 20 equals 45,851. And we have so this is the value, right? And we have the leverage. We already have the leverage. Okay, and it's written here, value divided by leverage. So that's divided by that. 45,851 divided by 20 equals, let's see together. It's already written here, right? But still we are going, oh, my bad. Still we are going to do that together. And there you go. So what is really the number that I need to occupy a position worth $45,000 in my account? How much money do I really need, guys? The money that I really need is $2,022.92. This calculation take amount of calculation day is too much time for me. I'd rather lost the trade. Yeah, well, I'll be honest with you, John. This technique is really to construct a position with logic, and I understand, but that people don't have the time and don't have the patience, and you know that depends on you, really. You can just randomly click things. Maybe it will succeed, but you know, everybody can analyze the way that they want. So we have this put down. And we have enough. We obviously have enough money. Okay, we have we have 10,000 when we only need 2.29. And let's carry on and examine the risk reward ratio. Okay, let's examine the loss that we are about. If God forbid we lose, we still have a good grip on what's happening. So if I simply do 10,000 minus 500, that equals 5% exposure, right? That leaves me with 9,500. Now, is 5% is an acceptable exposure? What do you think, guys? Is this an acceptable exposure? Okay, so Rajid, you're right that this is way too high. John, also, I'd say it's a bit high. Column, no, it's fine. Okay, so we have one fine. We have two no's and one fine. Who else thinks that this is fine? 5%? Okay, so John, you're offering 2% max. Oh, I understand. Dave, it's also fine. Okay, so we have another fine. We have two no's and two fines. Let's see how we can modify that. Let's suppose that we want to go for a half, okay? Let's suppose that 5% is indeed, because we have to remember something very important. We have exposure per position. We have exposure for the whole account. Okay? Now, this is something that people might not pay attention to, and it's important. It's important, okay? If I'm taking this position and it's 5%, I'm exposed 5%. Let's suppose I have another 4 or 5 positions just like this position. So my 5% will become how much? 25%. I'm already 25% with my account. So I need to think about two things: the exposure per position and the exposure for the whole account. What happens if I don't have enough margin? We do have enough margin, but what happens if the margin drops and God forbid, I start losing and losing? You have to know that your margin level shouldn't be dropped below, that depends on your licensing, but it shouldn't drop below 50 or 10%. Otherwise, the platform will start closing your positions, right? You get stopped out. Exactly, perfect. Okay. All right. Now, so why am I teaching you this? Who cares how much I'm losing or not? Well, from a simple reason that if I lose a big chunk, then my stability, my account will not be able to handle it as well. Meaning this 5%, if it would have been, God forbid, 50%, and I have two positions like that, let's just say that I might get tangled. Okay, I might get like it's written here, stopped out. Okay, and also something that I have to notice is my margin usage. So in other words, if I'm taking a position like that, well, I can't even take that, but let's say like that, I'm using 85% of my margin for this position. Yeah, and then I have to maintain it. Okay. Now, how do I finally, Danny, tell us how to change the exposure? Okay, no problem. So how do I change it from 5% to 2.5? I can do one of two things. A, I can lower the load size, and then obviously my profit will be lower as well. And we want that. So what I can do is I can simply get the stop loss closer, which was supposed to be originally, hold on. Right, we need the same length, $25 out of the current price. Nearly forgot to place it, which is 2265. And to have better numbers, I'm gonna use something called execute when price hits. That actually allows me to launch the position automatically on the price that I'm choosing. So I'm just gonna change it to 2290, which we had a minute ago, because the numbers has changed and it's scrambling our our numbers. And now it's not. Okay, and now we have perfect 500 and 500. Now, if I'm taking it halfway, right? Let's suppose I'm taking it halfway, maybe even a little. Nope. Our line just disappeared. Okay. And now, oh, let me push it up a little. Push it up to 22, 1, which is approximately half. I don't really, it's not really exactly half, but actually we can do exactly half. We're just going to do 2290 minus half of 25 is 12 and a half, which is 2277.5. Okay, and we're going to change that as well. And now we have perfectly half of what we have. The 5% became 2.5. Perfect. And we get to keep the same possible profit. Okay. All right, guys, we still have another 3 minutes. Who wants to share with me your thoughts about the technique and about the agenda and about the webinar, of course, if you have anything to ask, to add before we say goodbye? It's the first time for me. Well, all right. So Tommy, you shared with us that this is your first time and you hope you'll get used to it. And frankly, I hope as well, because this is, again, this technique allows us to construct the position with logic. It's not mandatory, as I saw before. Emmanuel, you wrote down that it's your first time too. Okay, okay. All right, we all understand that eventually, first time also recording. Yeah, I'm not sure about if it will be sent or not. I apologize. We don't. I'm not sure if you can. But listen, you can get this on YouTube, right? You can just go on YouTube. Here we go, Evans. This is my first time as well. Many people here, this is their first time. It's completely fine. You don't have to have any experience to know that. You really can just watch this webinar until you have a good grip, and yeah, shouldn't be a problem. Now, Emmanuel, what I wanted to comment to you, because you asked if it's been sent, and unfortunately, I'm not sure if it will be sent. So you can access YouTube and you can see the recorded version by yourself if you want, which should be hopefully today or later on this week. All right, guys, I appreciate your feedback. Thank you so much for helping me with such lovely answers. Unfortunately, our time is up. So exactly as was written down by Tommy and the rest, I also hope that you guys will get used to it. And that's it. Best of luck. Have a good, fruitful week, and look after yourselves.